Welcome to Building Better Communities with Bob Hart. This season, we're celebrating a major milestone for True America Multifamily. 13 years of building better communities across the country. In that time, True America has grown into one of the largest and most active multifamily investors in the U.S. Ranked number 23 by NMHC with 65,000 current units owned and managed and $16 billion in assets under management across 300 properties in more than 40 markets and in over 20 states. Today, True America's strategies span value add and core multifamily, affordable housing, residential development, and structured finance. True America is focused on one mission: helping meet essential housing demand. Now, here's your host, Bob Hart.
Hi, everyone. Welcome to Building Better Communities. I'm your host, Bob Hart, and today I have a guest who I think is one of the most influential young leaders in multifamily housing finance and capital markets in the United States. That's Kelli Carhart, Executive Managing Director and Head of Multifamily Capital Markets at none other than CBRE. Kelli, welcome.
Thank you, Bob. I'm flattered on that intro and really excited to join the podcast today.
I'm hoping for lower rates, Kelli, and better access to you. So I'm gonna go for it here. Okay.
Well, we are thankful for all the business we've been doing together between the firms and hope to grow it as the market grows.
Well, you guys are remarkable. You guys do a wonderful job. But continuing to our listeners, Kelli, the last 5 years has grown into a leadership role, leading CBRE's national, not just local or regional, but the national multifamily platform, which covers investment sales, financing, and investment banking advisory services. So your career has moved from really financing, which has started with Freddie and a bank many years ago, to really a broader role in a broader, bigger service platform.
Yeah.
And your career spans, I believe, well over 2 decades now. We could do the math on that, but I won't give all the dates anyway. But I think you spent 17 years at Freddie, working with David Brickman, Rich Martinez, and a really great group of people there during a big growth period where you oversaw over 30 billion in annual production across more than half the United States, 26 states, before joining CBRE in 2021 and being tapped for this role. And I believe you are the first woman to lead CBRE's national multi-platform. And that's a milestone that reflects both your leadership and your impact across the industry.
Yeah, Bob, you saying that, I hadn't thought of it that way. I just feel really fortunate to be at this platform and have this opportunity because it was a big change after 17 years at one company to shift and join the brokerage side and learn investment sales.
Well, it's a pretty big change from being a small town farm girl from, was it Trumpwell, Wisconsin, and growing up on a ranch and a farm to the big top. Tell us about your early life a little bit and how you got to your first job following University of Wisconsin and your college life. But tell us about your early life and how that shaped things for your journey.
Yeah, I think that is a good place to start. So I'm the youngest of four, and I have all older brothers.
So you're used to being in the locker room or the corral, whatever you want to say.
I think I said at one of my brother's weddings, I was raised by a pack of wolves because it was it was a lot of tough love and not a lot of grace, and you just needed to figure it out, right? If you're on a farm, you have problems every day, right? And there's things that always need attention, and it's kind of what's on fire first to how you divert your needs, right? And so everyone was really busy. My mom worked, full time. She was a paralegal. My dad worked 2 jobs. He worked the farm and then he worked at a mill. And so everyone helped out, although I was the youngest by 10 years. So my farm chores were a little bit more limited, but
they limited you to 3 hours a day.
I was responsible for cooking and cleaning. So I'm pretty good at
No
that.
milking of cows or feeding chickens or
No, we had beef
baling
cattle.
hay? What is it?
Yeah, no, I could, drive the tractor, four-wheeler and mow the lawn. But the house was on one side and the farm was on the other side of the road. So you had to cross the road. And so
Wow, a real
I,
Wisconsin farm.
I probably stayed on the house side versus the farm side, but I certainly, had a lot of exposure and I read a
But the
lot.
farm was not their primary living. It just happened to be a working farm, or was it their
No,
primary?
no, I mean, my dad grew up on the farm. It was established like in
Okay.
1800. I mean, they had, there's plows and horses, pictures of that.
Wow.
He was the youngest of four. So they're really proud of, having that. And I think I didn't appreciate it growing up, but now I do, because it's hard. It's a harder path. And you're always working. So
Yes, you are.
no one was around, right? And I had to entertain myself. So I read a lot because this
You
was
did.
pre-cell phones. Yes.
Because of the way the farms were set up, there was a great distance between others,
Yeah.
and it was you and your brothers. What was the biggest, the wide age difference
Uh,
between you?
18, 12, and 10 years.
Okay,
So
older.
yes,
That's a pretty wide age difference.
it is. Yeah. And we're rural, right? It was an hour bus ride because it was three towns to make one high
Wow,
school.
one school district had
Yeah,
probably
exactly.
spanned what, 50, 100 square miles to form a high school district.
Yeah, it was there were 100 people in my graduating class, right? So
Wow.
it was small. Everything was small.
But probably nice relationships built through that close knitness, I would imagine.
Yeah, and I think just our parents kind of instilled like you don't have barriers. You can figure this out, right? My oldest brother ended up farming because that's kind of how it works. But my middle brother went to West Point, and then my youngest brother had a full ride to an engineering school and is a PhD biomechanic, right? So like,
Wow.
there's no.
Where did he go to school?
He went to Milwaukee School of Engineering, and then he ended
Hmm.
up doing his PhD at ASU, and so now he's an expert witness, so he testifies. But yeah, so he's a very interesting, background and path. But I think some of the things that drove us were probably that we didn't want to be on the farm long term,
Yeah.
right? And it's not. It's just it's a different life, and I think
Different life.
we really appreciate that now.
Well, I think a lot of people that don't know much about farming have probably a romantic notion that maybe it's very genteel and comfortable, where it is very hard life, I'm sure, for independent farmers.
For sure. Yeah, it's not big business. I mean, at least ours wasn't, right?
Mhm.
But it taught me a lot. And I think part of the, the drive and always thinking about solutions is because I was in that situation at all
Yeah,
times.
you had to improvise from time to time. Can you
Correct.
fix a tractor, Kelly? That's what I want to know.
Let's just say I'm not mechanically inclined.
Okay, you can drive one.
Uh, they were able to figure that out, but I can drive a straight stick, Bob, and I don't know a lot of people who can do that.
Wow, okay,
And I was driving pickup trucks at a young age too, so I think that's
okay.
the four-wheelers, all those things.
So when you finished high school in your region there in Wisconsin, you went to UW, that's in Madison. You moved to
Yeah,
the big city.
yeah, it was I knew it was a great school. My mom wanted me to live at home and go to a local college, and I said thanks, but no thanks. And I was able to get in. I didn't have a scholarship, but tuition at the time I think was 2,500 a year
That's
for a
okay.
major university, and a really good one. So yeah, it was I was able to do it without a loan, which allowed me to go, which was great.
Yeah, well, Wisconsin's it's a state school, right? Or is it?
The state
Yeah,
school, correct?
yeah,
Yeah.
but a very good one.
Yep.
And
Yep. Big
today
Ten.
it's highly rated.
Exactly. So
And did you enroll in the real estate school there, or were you in the business, or what did you study there?
so I thought I was going to go into genetics. At least that's what I told my parents. I rode horses. I was very interested in horses, and said, okay, maybe I'll do this. And Wisconsin had a program, so that's how I convinced my mother that I would go to Wisconsin. Lo and behold, I get there and I say, yeah, that's probably not what I'm going to do. And I pivot to the business school. I end up being a finance major, and then I have extra credits, meaning I took a full load. I think my first year was 18 credits. Coincidentally,
Hmm.
the best GPA was when I had the most going on.
Of course it is.
It just,
Otherwise, you'd be bored. You wouldn't be paying attention.
I think you're accurate. Yeah. So then pivoted, I think my junior year, I said, okay, I have capacity. I'm going to pick up another major. They have some really good programs within business school. One was risk management and information, and then the other was real estate. And, it was kind of like, which one, right? And I ended up pursuing the real estate path.
Yeah,
So
well, they have a very good real estate program there, and they graduate a lot of known alums that are active in the industry today.
yeah, it's a great network. And I don't think I understood at the time, but wow, I am so impressed with the size of the network, the program, and then the people coming out of that school.
Yeah, it's very well regarded. Was a very famous professor there. I think his name was Graskamp. Did they name the school after him?
Yeah, Grass Camp, the real estate
Yeah.
program is named after Grass Camp. So yes, it's legendary, and I think that probably helped me get where I was professionally because of the cloud of the real estate school.
I understand that I don't want to say you were a party girl there, but you attended a lot of sports events. You had a real college experience, is what I heard.
Yeah, I mean, I think it's hard to not be a party person if you go to the University of Wisconsin. I think my mom said at one point, "I'm just happy you didn't get arrested." Um,
I'm gonna tell my daughter that. She's got one more year at Boston College.
right, that's a good party school too. So yeah,
Yeah.
it was a full college experience, right? I think I really probably enjoyed the non-academic aspects, more than the academic aspects. But it allowed me to be exposed to a lot of things like, two Rose Bowls, a Final Four, which was insane, and a Frozen Four. So it was
Wow.
top-notch experience.
Yeah. Well, it makes you more well-rounded, more equipped for the business world where you're balancing a good work ethic with academics and social skills, which is very important, particularly in a service role.
Yeah, I definitely I guess I'm a social butterfly, so I didn't realize that my roots probably came from college.
Well, it's definitely served you well. So when you get out of there, I guess you headed into banking for a medium-sized bank at the time.
Yeah, at that time, Bob, like internships weren't as much of an emphasis as they are today, right? So I
Right.
didn't have any internships. My summer jobs were, working at a golf course for tips, right?
Things
Which
weren't programmatic like they are today.
correct. Yeah, and it didn't give you weren't behind. But so I entered the working world like probably a little clueless on what to expect. But luckily for me, I was hired by like I said, a mid-sized bank that you mentioned.
Oak Brook, right?
Yeah, Oak Brook Bank in Chicago, now owned by MB Financial. So they got bought
Hmm.
out. But we had a credit training class, and there were 8 other college grads that they had recruited. And, Notre Dame, Indiana, primarily Big Ten schools. I think someone from Northwestern. So, really good group of folks starting out of college that had, some diversity. And we were, put through all the paces of, what a credit training program would look like, right? Be exposed to the bank, understanding. And I was placed in real estate. And
You
that's,
were right away. Okay.
yeah. And that's what I was hired for. So the
Did you
great
do credit analysis and things of that nature?
Yeah, and we had a loan committee, so I was supporting their originators on new opportunities. I also helped. We had a construction loan department. We had a woman there who ran the construction loan department, so dispersing draws, balancing draws. That was actually super interesting.
The
Being exposed.
servicing side, you learned.
Yeah, yeah, exactly, and just understanding, a little bit more on a construction loan and what it takes to get that done. So that was the bad thing about that job is that the job was
Hmm.
in Oak Brook and I lived in the city. So the reverse commute,
Oh, yeah, the reverse commute was
miserable.
bad.
Yeah, an hour each way. You're 22, like you want to be in the city.
Yeah, you do. Were you taking the train or how did you do that?
You had to drive.
You have to
So
drive. Okay.
yeah, so that was as soon as I had the opportunity, to, and it came at a women's networking event for real estate that was held in Chicago. So I was a part of this women's group, and I met a woman there who worked at Freddie Mac. Her name is
Mm-hmm.
Sharon Plattner, and she said, "We're hiring. I think you should apply."
Hmm.
And that was probably not even maybe a little bit more than a year and a half into this role. And I said, "Okay, the job's in the city. It's like a 20% pay increase." Yeah,
Really?
yeah.
That's when Freddie Mac was paying pretty well,
Well, or maybe the bank wasn't paying that well.
pre-GFC.
Pre-GFC. So
You
I
didn't know
said,
you were worth that much, Kelly.
yeah, I just said, I'll take the job. I don't even know what the job is. I'll take the job. It ended up being a great decision.
Yes.
There was a lot of growth opportunity, but that's literally how I ended up at Freddie, and was immediately placed in a role at that time. You underwrote and produced your own deals.
Who was running Freddie Multifamily back then? Was it Brickman or was it pre-Brickman?
I believe it was pre-Brickman,
Yeah.
and now I have to go back in the archives, but we had a couple of, heads of multifamily and a couple of CEOs during that
Well,
period.
I met Don Late. Is it Layton? Who was the
Mhm. Yeah,
CEO? Yeah.
there was a guy in Boston that his name escapes me.
Uh-huh.
And there was someone else, Mike May at one point ran multifamily.
Sure.
Yep. And then
So just to give us some perspective, now the Freddies and the Fannies they're what is it, about 80, 90 million per year now? They're what was it then? 20
oh,
plus years ago.
I mean, the region was probably doing 2 to 4 billion. So there's
The
four regions.
region, okay.
Yeah, so like let's just say 12 to 15 billion annually.
So loan sizes were smaller,
Smaller.
obviously, to reflect the market size.
Mm-hmm.
Do you feel the mandate and the emphasis on agency financing evolved as a result of Freddie being more aggressive and more entrepreneurial, or how would you
Yeah.
look at it historically, I guess?
Well, the model really changed, right? And by the way, I have to give a shout out to Rich Martinez because,
Yes, a great guy.
right, amazing like guru of real estate who has incredible relationships, and his, approach to the business was instrumental, I would say, in how I developed, right?
Hmm.
Because I was exposed to that. And he always said something, trips mean deals, right? And that was true. And he wanted us out in the markets, understanding the real estate and kicking the tires. And I think that makes a big difference in
As
your
I
work.
say to my team, particularly those that are on the outside facing, nothing good gets done at the office. It all gets done in the field. It all gets done in meetings.
Yep. Yeah. I'd love to hear more of Bob's wisdom. I heard there's a lot of one-liners, but yeah, I think you're 100% correct. And it's a lot more fun.
It's a lot more fun and it just makes you sharper, I think.
Yeah. Yeah. I think, and you just have a different kind of appreciation for the real estate. It doesn't
Mm.
translate on paper, right? And we can talk about some of the things that I learned when I was on the road, but at that time when Rich hired me, we were a balance sheet lender.
Mhm.
So we were more like a life company. And so we were very picky about our assets,
Sure.
very focused on sponsorship. But it was like, well, there's a gas station across the street. We don't love that. And so that all evolved. And by the way, there's great real estate that has gas stations, nearby. That's not a problem. But like I would just say we were probably the strike zone was very small.
Mhm.
And that's okay, but in order to grow you have to change, and we changed to a securitized model in 2009. And prior to that, so I joined, let's just say 2004, we were getting our butts kicked because the market
By
was underpriced.
banks,
Yeah, no, well, yeah, CMBS.
conduits.
Yeah,
Yeah.
1.0 IO at spreads that were sub 90 over, and so
Can
it
we
was
bring those days back, please?
well, I think we're getting the spread compression.
Spread compression is, yeah, just gonna
Yeah,
get rates
but
to help us.
yeah, we're not getting the sub 90, but yeah, so like,
No.
and that fueled what happened in the GFC, including the demand for multifamily housing bonds, which we would lose deals and then we would buy them. We would buy the
Hmm.
bonds on the market. So we had a lot of exposure to multi, but we couldn't do it directly. Like we weren't competitive.
Mhm. Is that what led to the whole K series business?
Correct. Yeah. So we had
Got
to
it.
figure out how to evolve and, and plus what happened with the agencies, right? Post GFC,
Right.
we didn't have unlimited balance sheet. So how
No,
are we going to make new
I
loans?
think it would be instructive and helpful because I think some folks who are listening probably won't know the longer history, but both companies were really independent from the government when they first began, but yet there was a government guarantee for the credit enhancement. Am I saying
Yeah.
it correctly?
Yeah. Well, it's an implicit
But
guarantee.
quasi-government,
Correct. I mean, we were publicly traded. We had stock.
right?
I
Both,
mean,
yeah,
yeah,
public traded.
publicly traded. We were profitable. And then, the GFC occurred and in 2008, both Fannie and Freddie were placed in conservatorship. And
Right.
so that changed, everything, right? You were no longer, you know, stockholder. You think about all these things that the benefits of being a
Well,
publicly
the
traded.
equity was wiped out, basically.
Yeah, equity was wiped. There was a lot of restrictions placed, including, as you mentioned earlier, pay, things like
Well, it
that.
was conservatorship, basically.
Correct. Yeah, and then we had to wind down the balance sheet. And
Hmm.
so, but we still had a mission, right? And they still wanted liquidity in the market. And at that point, there was not liquidity in the market, as you know.
No, I think there was a lot of uncertainty in the private sector and in government about our questioning our whole mortgage system. And I remember speaking at a few conferences with people that were, authoritative in this area, but I think it took a while to them to figure out that the demise of the, private nature of Fannie and Freddie had more to do with the single family business than it did with multifamily or commercial business for that matter. There were very few defaults. It was
Correct.
really in the period, I think, coming out of the Clinton administration where borrowing for houses was really very loose.
Yes. Yes.
That's
And
what
I think, it was take on more risk. And so if you're
much
holding
more
a
risk.
portfolio
Yeah.
of mortgages and the value of those mortgages goes down significantly overnight, then you're off sides on your balance sheet, right? And so that
Mhm.
was the biggest problem was just, the significant, you're a monoline business, you're in housing, and housing just, which was at historic values or, increase in values just went down overnight, right? So we had a mismatch. The actual assets were still performing, as you
Right.
mentioned. So it was really kind of a book value situation. And then plus we had everything on the balance sheet and there was no risk transfer. So that evolved into a risk transfer model, which was new, not on our single family side, but it was new to
Mhm.
multifamily. And by the way, multifamily was a small part of Freddie Mac and Fannie Mae's, like
Sure.
10%. Um, but very profitable part of the business as it, especially as,
Very profitable
yeah, especially
and
to the community.
servicing everything.
Yeah, so that evolution was 2009, and we started a securitized product, which I think a lot of our clients at the time were, very doubtful of, but there were a lot of benefits, right? Spread and um, mainly pricing that they were able to benefit from, and then other, benefits in the future. But I would say like initially there was a transition period trying to get clients to do that, but
Back.
you also have liquidity. So
Right.
at that point, like, it evolved and then it became a machine.
It did. And I think that had a lot to do with the leadership and the reestablishment, if you will, post GFC of Freddie and, being a real vital organization to do business with.
Yeah, great leadership. I mean, David Brickman, his vision, Robert Kuhn,
Hmm.
the people that were running, and they brought over Kelly Filane, who's now head of Fannie Mae, um, Deb Jenkins, right? They brought in some outside talent and just said, okay, we need to transform our business. And they were super successful. And then we were about relationships. I mean, I was in Texas almost every week trying
Sure.
to
I mean,
grow our portfolio.
those folks were your early mentors, it sounds like.
Oh, absolutely. And we had a lot of great women in leadership roles at Freddie, and I think Fannie as well, was, one of the unique things. So I saw the opportunity, to advance. That was never something that I thought would hold me back. And
Mhm.
it's just a really supportive, infrastructure and team. And I kept moving up, throughout the years as well.
Well, I think there's been good demonstrable leadership that you see played out today, both in the agencies and the private sector, where people that came up through the ranks, particularly women, in roles that, were not senior, but they earned their stripes and they were given the opportunities, and here we are. I think it's been a very good thing for women in real estate and for the industry.
Oh, absolutely. And I think that, I look at the alumni of Freddie and where they are, and it's an incredible network, right?
That's what I was thinking about,
Yeah,
exactly.
great relationships. I mean, all names like Amanda Nunnick and how successful she's been. And I'm so, I mean, it was amazing to work with her, and I'm so proud to see where she's gone. But, people in Chicago all came out of LaSalle Bank,
Mm-hmm.
and they've, all been super successful. So it's a great network, and I still, talk to them. We have, I think, a reunion every year at NMHC, and everyone gets to talk about, compare notes on, their new gigs and how those are going.
It's interesting because there's certain organizations that create foundational training and mentorship that maybe is not fully harvested within their organization, but later leads to opportunities for their alums in other places. And LaSalle was one, Continental Bank back more in the 90s. How do you think CBRE fits into that world as a training camp, if you will, and a place that now fosters younger talent to grow? And what is your feeling about that?
Yeah, a great question. I mean, very similar, because like the exposure opportunities are kind of unlimited, right? I think about what Freddie offered and what I often tell people, including my nanny, who I referred, she was actually our college sitter, referred to
Really?
Freddie in Chicago. Yeah, and I just said, You're going to get no other place will offer the deal exposure that they will. You won't see this many transactions. And when you're young in your career, the ability to see that much volume will help you
Hmm.
get perspective.
Right.
So, just take it as like an opportunity to learn, and deals mean opportunities, and you'll learn. So she went there, and I think CB has the same thing, right? There's so many different avenues you can go within the platform, but you also have experts in other sectors, right? Industrial, retail, office, tenant rep. And then you have, okay, let's talk about the largest multifamily platform in the country, right? So it's just this exposure. Oh, hey, I might need to move at some point. I don't want to live in Austin anymore. No problem, right? We have a team in Florida. Why don't you go check them out and see if they're hiring? So I think that type of exposure, and then you're a top, Fortune 150 organization that's really been reputationally been around forever, and is a gold standard. So
What is
it's
the history of CBRE goes back to, is it a British roots? I'm trying to remember the Richard
yeah,
Ellis was a British company, I think, wasn't it?
yeah, Coldwell Banker, right, was
Coldwell Banker, yeah.
US, and so people often ask me, "Well, you work for Coldwell Banker?"
They were in LA based?
I think,
What? Yeah,
yeah.
the original Coldwell Banker.
And you're Bob, you're asking me a question. The history of CB is probably not like I'm not deep on.
All right, we're gonna have a quiz. We're gonna have a follow-up podcast on this. I know it started with the Richard Ellis Company and Coldwell Banker. We know that.
yeah,
I
well,
think Coldwell Banker was one time part of the Sears Roebuck Company, as I remember.
okay, so that I do not know, but I will
I know
know.
Allstate was at one time when Sears Roebuck was like the GE of its day, aggregating non-related firms. But what's interesting with CBRE is it emerged, I think, into a much broader service platform early before it became fashionable to be that. It kind of broadened its offering with what I, as an observer, if you will.
Yeah, and I think like look, my experience at Freddie was that CBRE was, the leader in the debt world. So, that was kind of, they had bought LJ Melody, which was a Texas
Right.
company, And that was, CBRE, LJ Melody, and eventually just came CBRE. But, they had started as an investment sales platform, at least in the multifamily business, and then expanded into the debt platform. But their debt platform at the time was, the top debt platform. So I got exposure early to, some of the most successful people in the industry.
I think another thing I've observed from CBRE, particularly before, again, you see it now in almost every major firm like yours, but I think CBRE adopted early on the team concept, where brokerage was the team sport as opposed to an individual sport, and drew in its financing arm as well as its investment sales arm, and really worked hard together to help the client or the seller or the buyer get through a transaction.
Yeah, absolutely. And it's hard not to with, when you think about kind of I'll say the word, the depth of data, right? With the size.
Well, but you have to create a culture though that fosters that.
That's true.
That's as important as all the data in the world.
Well, the culture, I think that's a good point. That's one of the reasons I came to CB, because I looked around and the people had been at the company for 18, 25 years. And
Right, long service.
yes, and it's cultural, right? I'd been somewhere for 17 years. And so they're great people. It's a great culture, and you can't just create that, right? And I think that's a real testament to the platform.
And I think also good succession planning, even at the brokerage level. I mean, some of the greats in the West that I've worked with, like Tyler Anderson, and was there, I think, 4 decades. John Halgrimson, 3.5 decades. Were all just great people to work with. They were, like part of our fabric of what we did, and they left in place their franchises with successors.
Yeah, it's incredible. I will admit, I had no idea how prolific our investment sales platform was before coming over. I mean, I knew it was good, but once I, was then responsible for it, the people, the legacy, the teams, right? It's pretty eye-opening on just how deep we are, and the people that are, have been here forever and have great cultures.
Let's shift that a little bit and talk about markets that we find ourselves in today. Not the easiest environment. We've seen elevated interest rates that are persistently high, lower spreads though, like you pointed out, which has resulted in, for everybody, just slower transaction activity. And then there's a growing, we'll call it political and social concern about affordability around the country, playing out in the multi-space, playing out at the ballot box in terms of more progressive leadership coming in into office. So how would you describe from where you sit the multifamily landscape right now? Like, how would you characterize it?
Um, that's a great question. I think that right now it feels pretty challenging, right?
It's been long, this sort of reset. It's been going on its 5th year.
Yeah, it has been a long time, and it, we were in a long cycle of, let's just say, growth, and so it's certainly a shift, and there's a shift for a lot of people that maybe haven't known something different, and it just feels like we're a little bit stuck, right?
Yeah.
But despite that, right, no one's happy. The sellers aren't happy, the buyers aren't happy, and so you're never really delivering like good news per se. I think like you're getting deals done, but with a lot of friction, and I think it's certainly an art right now, and it's very dislocated. But dislocation creates opportunities, right? And there's a lot of also noise on the regulatory front, as you mentioned, and that impacts liquidity
And
and
psychology of of buying real estate in an environment that's subject to that, or could be
absolutely.
subject to that. Example is Greater Boston. I mean, we were under the threat of statewide rent control up until about 2 weeks ago. And, if you wanted to monetize there, you weren't doing it in the last 6 months when all this was heightened.
No. And now, within a week of the announcement, we have people that are back in the market and have liquidity, increased liquidity and most likely higher pricing, right? And
Right.
so, but they were kind of, the uncertainty factor is really challenging. And then you have the dynamic that just was announced in New York in a 2-year rent freeze. You have some things playing out in DC, and then you have Denver, the most recent election. And so I think, like, when I talk to our clients about what is their biggest concern, is it geopolitical, is it interest rate risk? The answer is regulatory. And that's typically the number one response is the regulatory risk and the impact to their business and liquidity on their assets. So I think, like, that is something. I mean, you've been doing this for a long time, Bob, and I always like to ask those with many decades of experience, their perspectives throughout the years. But this feels like a pretty difficult time.
There's a lot of headwinds that have cropped up to be much stronger in the last 5 years than we've seen in the preceding 20. We've always experienced cycles. The corrections have been short, and the bounce back has been resilient. We were in a very long up cycle from, call it 2010-ish to 2020 plus. And now we're in a very long corrective period due to artificially low rates and artificially higher rents because of the COVID phenomena.
Sure.
So we're still digesting that. Yet the economy isn't bad. The economy is good, which I think is in part why you see people hanging on more, not fire selling, waiting until they can sell. And so you've created this sort of backup in the commercial real estate system. Plus, you've done the same thing in single family because there's less supply, and people that have mortgages at 3% are not moving up too quickly.
Yeah.
So it's we're a victim of our own success in some ways.
Yeah, and I think that's, like, the commitment to housing, or I would say conviction in housing, hasn't changed, right?
No.
Despite, like, me saying this is challenging. Well, we're still getting transactions done. I mean,
We are.
we'll do 150 billion transactional volume, probably plus this year, despite, the annual hiccup. Well, I will say every year we've had a major event that has disrupted transactions.
And that's across investment sales as well as mortgage origination.
No, that's just investment sales
That's
transactions.
just investment sales.
Yeah. So as a whole, last year was 150 billion. We thought it would grow 20+%. I think we dialed the 20+% back. But I do see some momentum. It's a summer, so it's historically, typically a little bit slower in post Labor Day launches in a lot of markets. So I think that we'll be at least on par, and I would expect above last year on transactional volume.
That's encouraging.
It is encouraging, despite what happened, right? What happened we had a war, we had an oil shock, we had an interest rate, sell off. Like, these are challenging things. So
no, it is. There's a lot of quick action things that are occurring. We have this war bouncing back and forth every 5 minutes. The threat of the Fed now raising rates again. There's just so much going on.
There's so much going on, but yet people are convicted in housing. It's going to be the largest asset class for transactions. I mean, industrials is catching up this year, but it does feel like, the conviction factor, whether it be the cost of home ownership, which we talked about, interest rates and where they are, and I don't see that changing anytime soon. And there's, like, I don't know, 6 trillion of mortgages that are sub 4%. Those people aren't moving.
Is it that high? Wow.
Yeah, it's a significant number. So people aren't moving, right? Which means that those homes aren't available, and it's obviously expensive to build. So the supply problem is still, like, lack of overall housing is still a challenge, right? Even though we had obviously a lot of multifamily, we're coming to the supply cliff. So there's a lot of things that are, we can see the improvement around the corner. It's seemingly a little bit slower than we all thought, or maybe we were just way too optimistic on the recovery.
Well, I think you're right. I think there was a pattern hoping that, it's a 1 or 2 year turnaround, and it's not. It's taking a little longer. You've spoken about multifamily cap rates. Um, do you see investor sentiment improving around cap rates, or what do you think's going on there?
Well, buyers think that they should be wider and sellers think they should be tighter.
Always.
Right, but for the most part, they've held fairly steady, outside of, I would say, certain assets that may have some liquidity challenges. And I think, anything that's not on the fairway, people want yield today. And we saw that compress amongst all type of asset classes, all markets, maybe it be major or tertiary. There was no differentiation. So we're going back to where we were, right? No surprise. And I think there are some, asset classes that have liquidity challenges right now. And so I've heard some of our clients say the largest delta in cap rates that they've ever seen from, let's just say, Class A housing to maybe Class C housing, or, the oldest stock.
Right now, well, the whole flight to quality.
Correct.
It's very hard to sell B buildings and call it even C buildings today.
Correct. Yeah. And physical obsolescence. And, if you have rent control, how do you maintain maintenance? So things like that are challenging. So yeah, flight to quality is a real thing.
Let's talk a little bit about pure workforce housing and a little bit about its impact on the community. A big central theme of our podcast is about building strong communities, or as I say, building better communities. And housing is at the center of that conversation, which we're talking about. How do you see the connection between housing affordability and long-term community health? See a connection there?
Oh, yeah, absolutely. I think that when I was at Freddie, there were some big moves being made, right, around community and how you can create a community that will retain tenants, and you don't necessarily, it will drive rents in the long run. And I'm not saying, you're raising rents at an astronomical level, but it helps one retain, your turnover costs are lower, your maintenance costs are lower because you're part of a community, there's services being provided. And it's incredible to see some of the operators that are doing that, right? And things that, your team has done as well. So I do think it makes a difference how we at Freddie wanted to reward that was, lower cost of financing, right? How do we help you do social, address social needs and gaps? And that was one method, right? And I think they'll continue. Both agencies are very focused on their green improvements, right? That was a big move.
The green theme, yeah, with the green incentives.
Yeah, green incentives, and you got better rates. And
so you were doing that before ESG was in vogue. Now it's out of vogue again. So, but we've been all doing that in multi before they even talked about it.
Yeah, and I mean, you're obviously very focused on this with some of your charitable organizations, and I think like it's a necessary, and I think probably the leaders of this generation, and myself included, need to be thinking about how we can help, our industry, because there are a lot of people that, don't have the income levels to take care of their families and afford housing and work. And I just think about as a child, childcare, right? That's a big
huge issue.
cost. Yeah, and if you can provide that even at the property level or things like that, I think there's a lot of opportunities. So I don't have the answers, but I certainly want to work on them. And I think the agencies will continue to be a great partner in making strides there.
Not specifically on childcare, but I think this bipartisan bill that's in front of the president, the 21st Century Housing Act, some people have criticized as being, a puff thing, ceremonial, this or that. But I think it's a real attempt by the federal government to incentivize the private sector and to create initiatives at the local level to reward the development of housing.
Yeah.
More money for LIHTC, more money for communities that upzone or, we're not putting obstacles up. And I think that's one of the challenges in America is you have special interests that don't want housing nearby, but yet we need it, particularly in small resort areas and places where there's not affordable housing and people have to travel far to work.
Yeah, density. I know, I live in a city that just changed their density requirements, Austin, and certainly we have a supply glut, which you see what's happened
That's
with.
the best deal in the country for renters.
Correct. Yeah, so it works, right? You dump a lot of supply, rents go down. But I do think, like, I look at what it costs to live in Austin, and it doesn't feel very affordable to me. Although,
Class A rents are still high.
they're pretty high, yes. And you think about wages and working, if you're, let's just say, working in a restaurant, right? How it's affordable. So I think about that a lot, right? We go to nice restaurants and I wonder how people are making it work. So and then gas costs, like you said, if when
Fuel
we were
costs are high.
here in California, it's $7 a gallon it was when we were at $100 a barrel. We're
Yeah.
at 3 in Texas right now,
Are you
305.
really?
Yes.
Less taxes. There you go. Go
Close to
Texas.
oil.
I love it. So let's talk a little bit about mentorship and, you know, being a woman in what has essentially been a man's industry for many years. We talked about that earlier from the lending side that, Freddie had really, um, a lot of great leadership that came out from women that went up to the ranks. But how do you, what's your leadership philosophy about mentorship, whether it be for other women or just people in general? How do you view the world there?
Yeah, I think it's important, right? I think you see people around you and they inspire you. And so helping others, capture that or providing them an avenue to, learn more and just understand how you got there and what you would recommend, I think is really important. And so spending the time and, you know, like I don't necessarily know there has to be some structured program, but some of the most influential people in my life were women who took an interest in me and gave me some great life advice, right? Professionally and personally. So I tend to gravitate towards that, and I've surrounded myself with others like that, and I definitely think that it's important to provide that back because I don't think I would be where I am if people didn't take an interest in me. And I would say, including, Rich, but Peter Giles, who was a boss of mine in Chicago, who was just very thoughtful about making sure I had exposure to others and clients, right? I got to be in a room with Bob
That's
Hart.
a form of mentorship.
Yeah, at a young age, right? I
Hmm.
was in rooms with very important people that I probably didn't need to be in, and it was excellent.
So you're obviously a very busy person, but you're also very grounded and you manage large teams that operate on a national level. Is your grounding come from that early farm life? Like where does that ballast come from for Kelli Carhart?
Yeah, I think so. I think I'm just a realistic person, direct. What you see is what you get, Bob. I think I told you
Hmm.
that. It's probably pretty obvious. So I,
Oh, I
I,
know some people that have been at the other end of that, but we'll leave that out. That'll be between us.
well, I hope that people feel that they can trust me and that I'm
Yeah.
I'm working to get the best outcome, right? And I'm thoughtful about that. So that's worked well for me. And there's a lot of people who didn't know me, right? So I had to establish trust. I had to get them. And by the way, transparency is something that I pride myself on. And I think that's really worked for me. So I give a lot of information, share a lot of things, and hope that that helps people see that what I'm looking at and thinking about, but also help you do better in your business. And sometimes that doesn't work for everyone. Transparency, right?
Well, it's interesting you mentioned that because I just was giving a little bit of a corrective lecture on a deal that we lost to a broker who stopped communicating. I said, long before I became a CEO or was doing acquisitions, I was doing dispositions just like you were running them. And I said, it's all about good process. It's all about communication. It's all about transparency. And people remember how they were treated. They don't always win or they don't always lose, but they remember how they were treated.
Yeah,
And I think it's
absolutely.
super important.
It's great advice. Like I said, I want to get some more time with you to just get some of the life nuggets, but I don't know anything else, and so it's just who I am, and it feels like it's been working, and at some point it might bite me in the butt, but I'm going to continue with the
Uh,
transparency.
I think it's going to work for you. So now we're at a much more mature stage of your career. What motivates you the most now? What gets you out of bed, not in gear in the morning, revs up the motor?
Yeah, well, learning, right? I'm constantly learning, and to what we were just talking about, I think like acknowledging I don't know things. Like as a woman, sometimes you try to have all the answers. And I had a career coach one point that said, "So what happens if you don't know the answer?"
Yeah, what does happen?
Nothing, right?
Nothing. No.
Nothing. But at that point,
No one knows all the answers.
I know, but I felt like that I didn't belong in the room if I didn't have the answer.
Wow.
So if maybe it was a point in my career where I was trying to prove myself, and if I didn't have the answer, I wouldn't be in the room. But
Mhm.
I think I'm past that now,
Yeah.
right? So I think the learning aspect, I am constantly learning. I'm being exposed to the investment bank, things like tender offers and, just and sovereign wealth funds I've never heard of before, right? Things like that now are part of my everyday. So I just keep gaining knowledge, and that part's fun. Um, and I'm meeting new people. I love the people part, Bob. Like I've come
Mhm.
to realize, like I don't want to be in front of a computer. I want to be on the
You
road
want
in
to
front.
be engaged.
Yeah, I like that. And I think that's probably where I'm most effective. But I remember the Carla Harris, book where she talked about productivity capital and then relationship capital. And it
Mhm.
really makes a lot of sense, right? Like I'm probably in that part of my career.
Well, one of the mantras we have at True is that we transact in relationship capital.
Yeah.
It's a very important, it's, it's not about the last dollar, it's about the relationship that matters the most. So you're too young for me to ask this question, but I'll ask it anyway. When you think about your legacy, Kelly, what do you hope to leave behind? What matters most to you?
Yeah.
You have a long runway to answer that. We'll take the early stage answer here.
I hope so. Yeah. Still young. I think one thing we talked about before, the two of us, was just that I started things later in life, right? I was very focused on my
Mhm.
career. At 39, I met my husband. At 40, I had my
Your
first.
personal life, you mean, you started
Yeah, my
later.
personal life.
But I
So
think that's a common thread among women I've noticed they're very successful.
yeah, I put my career first and then had the opportunity to, have a family. And I'm so thankful for that because it's brought me so much joy. So I think I feel like I have a brand and people know who I am and but like really it's just the relationships I've built and I don't necessarily know I'm going to be somebody who's made a big difference in the multifamily world, but maybe I've opened some doors for others and created the opportunities for others to grow and define themselves, including younger people. I think that part's fun, right? To see them
Oh.
successful or people you work with that then get promoted and do other things. So I like that idea. And then I'd like to really help women, right? Financial
Mhm.
literacy, um, being on their own, things that maybe they weren't able to do. And that's something that I'd like to think about kind of in the next stage. But I'm going to be raising my son. He's only 5. He just turned 5 for a while, right?
Wow. It was a
So
COVID baby.
yes, he was a COVID baby. So yeah, I'll share a fun story. We were in Wisconsin for last
Mhm.
week. I love fireworks. I grew up
Oh, you
like
do?
and we got some fireworks because they're legal. And I had a
Mhm.
Ford, and it for my son's name is Ford, and it was emitting fireworks, and then it became a smoke bomb, and it was a $5 Ford, and I swear I wish I bought 20 of them. It was incredible. So those moments are pretty special. So I think that part
Yeah.
is awesome too.
Well, keep igniting the fireworks, Kelly. It's working for you. This has been a fun conversation. I've enjoyed your perspective on leadership, housing finance, the future of multifamily. Um, really appreciate you being on, and let's continue the conversation personally and do a lot of business together.
Yeah. Thanks, Bob. This has been super fun and mutual. I would love to. I just want more of the wisdom and to talk about what we can expect in the future because nobody
All
really
right. We'll do that over some scotch.
sounds good. See you soon.
Thanks, Kelly. Thanks for joining us.
Thanks.
Bye-bye. Good.